Always a very good morning from him, and of course it's a very good morning from me. Hope all is well with you, and welcome to my mortgage live stream. So Easter is done, kids are back to school now, and the world's calmed down a little bit, isn't it? Although actually geopolitics is in a right old mess at the moment. But the mortgage market's not looking too bad, actually. I've got a couple of ideas to help you with that. But we've got a big session today on buying and selling costs, just to update our CMAT boot camps, make sure we're all up to date, etc. Just want to refresh that video for you and give you an update for you on the selling and buying costs of taking out a mortgage, because it's a great way of getting customers, clients locked into you as well by giving them some valuable advice and information. And then we've got a lovely little technique for you later on called Ping It Back, which I'm very excited about. Ping it back, as they say in pop circles. Anyway, enough of that coming up later. So hope all is well with you, and you're keeping well, keeping good, keeping enjoying yourself. Read a beautiful little summary of the mortgage market actually the weekend, which I wanted just to share with you because I think it's a really good indicator of how things are. So let's just pop this summary up on the screen for you, as you can see. Let's pop on in as well, shall we? Let's pop in and say hello. Now here's an article. I pick up quite a lot of magazines at the weekend. This is from the Money Week, which is a jolly good read actually if you have a chance to do so. Money Week is a compilation magazine of lots of little things. Anyway, let's zoom in and just share this a little bit with you. Let's pop down the bottom there so you can still read the article. There you go. UK interest rates could be heading sharply downward thanks to a combination of sticky inflation and the feared fallout from Trump's tariff plans. And that's from Sky News. And you can see the markets have priced in 100% chance of a quarter point cut in May, 8th of May. So if the rates go down in the 8th of May Bank of England base rate, which they will do, we've already taken that into account in our fixed rates. So that's something you'll need to explain to your clients. 2 or more cuts are expected by the year's end. So it's looking good, isn't it? The sub 4% club sharpening their pencils. UK lenders are getting quite competitive, as you can see now, all offering deals below 4%, although that is usually with big deposits and big application fees. But the best news for me, as far as I'm concerned, is looser lending rules. Now, I don't think this is like being silly lending. We tightened them up far too much back in 2014 post-crash. But buyers without much of a deposit have a growing number of options. So you've got lots and lots of low deposit deals, highest since 2008, the number of 95% loans. Yorkshire Building Society, 5,000 deposit. Skipton still got their track record, 100% lending. And you're hearing now of these lenders lending 5, 6, 7 times salary with interest rates coming down as well. It's good news for first-time buyers, as far as I'm concerned. So that's your looser lending rules. So nice little article for you. Kind of gives you a good indication as to how the market is doing. And even if the world's gone crazy and recessions kick in, all those sort of things, the mortgage market might carry things along nicely this year as well, because there's a huge pent-up demand. Anyway, enough of that. That's an update for you. Let's go over to our first big session of the day. And this is about buying and selling costs. So let's take you through this section for you, because it's going to be updating and giving you some new information. So let's pop over to the whiteboard for this one. And I've already started with my heading here, buying and selling costs, for those people who are wanting to buy and sell a house. Usually residential purchases, not so much buy-to-lets or bridging involved here. This is a straightforward sale. And I want to give you a bit of context before I start going into numbers and figures and things like that for you. So what have we got here? We've got a couple who are selling their property. They've got a property here. Let's just draw a little picture there, because we like my little pictures, don't we? A little garden. There we go. They're selling this property, and this one's on the market at 465. So these are important figures, these, when we start working out the costs. So reasonable property, selling at a good price. So this one's up for sale, as they say. So let's put a little sign in there, say, for sale. There you go. Hello. Please buy us, you know. Now, they're also buying a property, this couple. Let's make them a couple, shall we? Might as well. They're also buying a property, a bigger place, big sort of mansion type thing. So let's just put a couple of chimneys in here for you to indicate this sort of mansion status of this property. There you go. But this property's on the market for the princely sum of 725,000. So we're going up market now with this, depending on where you are in the country, of course. It may not be up market. That just might be a flat in London, that one. Now, you've got a number of costs involved, but just to finish off the context for you, the mortgage that the couple have on their existing property is an SVR mortgage. It's a standard variable rate mortgage. That's what they're getting rid of that one. But they're then getting a new mortgage, just to give you the right figures, of 425,000. So a big old mortgage that. Yeah. Now this one is a 5-year fix. They got that sub 4%. They're in the sub 4% club. So that's the figures involved there. Now, there are 3 sets of costs that we need to go into, 3 sets of costs. The first set of costs is the selling costs. So selling the property, there's a set of costs involved there. Naturally, you've got buying costs for buying the property here as well. So let's just put that up there for you. There's costs for buying the property as well. But there's also the lender's costs. People often forget about this, actually. The lender's legal costs are factored in as well. Often your solicitor does them all, you see, so you don't often see the breakdown of them. So there's the context. Let's now dive into the different costs involved here. Then let's look at some numbers and figures and things. And I've got some slides for you to help you through this one. So the first thing is take a look at selling costs, shall we? The costs of selling this 465 property. So let's pop across and take a look at our selling costs, shall we? Now, selling costs, as we mentioned, are the costs involved in selling your house. And there's a few obvious ones that we know about quite a bit. First of all, let's get out of the way so you can see that. We've got legal fees, the solicitor to convey the property. Then we've got lender's fees, estate agent's fees, and then removal costs. So let's break these down, shall we? So in the legal fees then, we've got ranging from £500 to £1,000. And these are the costs involved to convey the property away from you to the new owner, plus land registry amendment fees as well. The lender fees, approximately £30 to seal the fee for the mortgage. Now, of course, we've got an SVR mortgage on that property. It's standard variable rate. There's no redemption penalty. But there will be a £30 or so sealing fee, as we call it. They will also need to have the charge removed at the land registry because the lender will have a charge to register. And as I mentioned to you, is the loan as an SVR, there's no redemption fee. The big one, of course, is the estate agent's fees for selling the house. And they cost money, typically 1.5% on sole agency, plus VAT. So you're looking at sort of £8,500 or so for property of about 465. That's a lot of money, as Silla used to say. And then you've got your removal costs. Don't forget your energy performance certificate. Energy performance certificate is something that you need, about £100. The estate agent takes care of it. And that's to prove that your property is performing well on the energy side of things. Removal costs, professional removals can be quite expensive, actually, depending on where you're going and what distance, etc., comes into its own. Or you can hire a van. A man with a van, as they say, if you prefer to do so. So that's your selling costs then, which we see for there. So obviously we're selling this property. So we've already got quite a lot of costs involved that have got to be met. Let's now take a look at the buying costs, because that's quite a frothy amount of money they're buying at. So there's quite a lot of costs involved in that property. So let's take a deep dive and take a look at those then, shall we? Let's take a look at the buying costs of buying the property. Well, first of all, you've got 4 main headings: stamp duty, legal fees, survey, and mortgage costs. So stamp duty, land tax, we've got videos on that topic, of course. But if you wanted to work it out, it's 0% on the first 125, then it's 2% on the next 125, and then it's a princely 5% on the remainder. So it's quite expensive now, as you can appreciate. And that's in England. Stamp duty, land tax for England is slightly different in Scotland and Wales. Legal fees for buying the property range again £1,200 to £1,800. We've got a big property there. It's quite expensive to do, and it tends to work according to the price, which may not be the right way of handling it. And there's disbursements, which I want to take a look at in a minute, because these are quite detailed. You've then got the survey. Now, I'm not talking about the valuation here. I'm talking about your own survey of the property itself. Now, you can have a home buyer's report, or you can have a full building survey. And it does vary according to the property, the age, and how much you're willing to sort of risk, if you like. Because you're buying at £750,000, you really ought to get a decent survey of the property. After all, you'd have your car looked at if you were buying a new car, wouldn't you? Mortgage costs. Final one there. You might be using a broker. Hopefully you are, and that she will charge typically £1,000 plus a proc fee, of course. But for that, she's going to search the market, get the right deals for you, get all the paperwork done, make it all happen. So it's definitely worth the money and less stress to worry about. And I mentioned to you disbursements. Now this is one that people appreciate. You have to pay it. It's usually a bill that the solicitor gives you at some point as well. And there's lots of them. So what I want to do now is take you through the different disbursements to make sure that you're comfortable with those. Now, when we say disbursements, it means all the things that the solicitor has to pay for on your behalf, and then obviously will claim that money back from you. And often the money for the disbursements are required up front as well, because they have to be paid up front. So I've got quite a few here for you, which I'm looking forward to sharing with you. So let's just pop down there so I can see that. And I've drawn up a table. And the table, as you can see, has got 3 headings: the item, typical cost, and any notes. And at the end of this, you could probably take a photograph if you wanted to enjoy this table. So first of all, then, the first one I've got for you, local authority searches. To search the area in which the property is based using local authority records. It's now being pretty much digitised at the Land Registry. This is typical things like planning permissions, change of use of areas around you, new roads going to be built, that sort of thing. Jolly useful. You can do it yourself if you want to. I did. Typical £100, £200. Checks planning, building control, highways, pollution, etc., which is a good thing to do, of course. Secondly, we then have drainage and water search. Typically £100, confirms connections to the public drains and water supply. We had ours done here. We're with Severn Trent Water, but the main sewerage pipe is in the back garden. It runs along all the back gardens. Jolly useful to know that, particularly when we were sort of digging out the cellar as well. So important to know that about the water search there. Number 3 then for you, environmental search. Identifies contamination, flooding, ground stability, etc. Another £100. If you're close to a brownfield site, for example, maybe an old factory was there, you don't know what's underneath the ground sometimes, do you? So an environmental search is definitely one that you will want to get done. These are all done online now. The lawyer will contact the company, and it's all done automatically using AI a lot now as well to really speed things along. Then we've got chancel repair search. Now, historically, if you're living near a church or fairly close to a church, you might be liable for the church repairs. Not a lot of people know this. The chancellery is the roof over where the main part of the church is, I believe. We had to have one done here, actually. There's a big church called St Stephen's, I think, a couple of 100 yards away. And we wanted to know if we were liable for costs of that one. But we weren't, thankfully. But if you are, it can be quite expensive. Okay, let's get on to our next one for you. Bankruptcy search does what it says on the tin, really, isn't it? Required by the lender to confirm the buyer isn't bankrupt. Just a couple of quid, that one. Then you got land registry search, the big one. Let's just pop up the top there so you can see that. This is not the most expensive part. This is just to search it to make sure that the legal title is there. The person selling you the property has got legal title to do so. They've got absolute ownership. It's only a couple of quid for that one. It's only a search, it's not an amendment for the land registry search. Then we've got the land registry fee for registering your ownership and your title to the property. That's a good £300 or so based on that purchase price. So that's a bit more expensive, that one, isn't it? Because amendments have to be done. Then we've got ID verification, anti-money laundering check as well. Again, £10 to £30. AML, of course, is a key aspect of all aspects of financial services. Almost at the end now, bank transfer fees, 50 quid to transfer the money from the building society and the bank to your lawyer. A lot of money, isn't it? But there we are. It's all done properly and securely, and it's probably worth the cash for that as well. All changing with scams and things like that, isn't it? And finally for you, a mining search. If you're in an area where there's past mining, a National Coal Board, for example, in Cornwall with tin mining, you'll need to get a mining search done, about £100, to see if there's any caverns underneath your property, which won't be a very good thing to have, of course. So there's disbursements, quite a lot of them. They all add up as well. As you can see there, if you added them all up, you're looking at quite a few pounds involved. Now, the last cost for you are the lender's costs, which people don't always see or understand this one, lender's costs, because the lender, of course, has various costs involved, and they'll want them being paid by you, so mostly legal costs. So let's dive into what we've got involved there, shall we, the lender's costs. Now remember, from our context, we were looking at a mortgage of 425 fixed 5 years. And this is the property in which that mortgage is going to be secured on. So that's the context we've got for these lenders' costs for you. Okay, let's see what we got. A mortgage arrangement fee, valuation fee, telegraphic transfer fee, and lender's legal costs. Now, the mortgage arrangement fee is for the product that you're buying. It's charged for setting up the mortgage product. Typical cost £0 to £2,000. So some of these 5-year fixes can be quite a lot of money as an arrangement fee. It's just one way in which the lender makes more profit, really. That's all at the end of the day. Valuation fee, not the survey. This is the building society or the bank's valuation for mortgage purposes. It pays for a basic mortgage valuation. Shouldn't be looked upon as anything to tell you what the property is, what condition the property is at all. You need to get your own survey for that purpose. And sometimes it's covered by the product itself, by the lender, or the arrangement fee might include it, for example. Mentioned the telegraphic transfer fee for releasing mortgage funds on completion. Typical cost £25 to £50. We've covered that already. Then it's the lender's legal costs. So the lender's got some costs here. When the lender uses their own solicitor, the borrower must cover lender's fees, typically £300 to £800. Some of the lenders use their own lawyers, particularly if it's in the specialist marketplace, particularly buy-to-lets, that sort of thing, because they trust their own lawyer firm. But you have to pay for it because it's part of the deal. Now, some lenders require dual representation. The lender has their own solicitor separate from the borrowers. In that case, of course, the price can get quite expensive, particularly if it's a specialist mortgage product. The borrower pays both sides fees. An additional £200 to £400 might well be required there. And that's to draw up the mortgage deed, make sure that there's title to the property and everything is in order. So there we have our costs for you, broken down into 3 components, really: selling costs, buying costs, and the lender's fees as well. Jolly expensive now to buy property in this country, very expensive, which is why very few people compared to the past are buying and selling. I mean, 10 years ago, people would buy and sell properties 6, 7, 8 times a year, in their lifetime. Now people tend to hold off because the costs of buying are so expensive, as we're aware of. So hope that's been useful for you. Bye. Well done, well done, well done. Okay, let's finish off then by taking a look at a little sales tip for you, a little idea for you to help you when you're dealing with customers and clients and helping them to purchase their mortgage and financial advice and all those good things. Now, I've called this one Ping It Back. It's a great phrase, isn't it? Ping it back, this one's called. Now, where does Ping It Back come from? Well, it's designed to improve your questioning skills. I think it was a tune from Moloko from the late 1990s, but that's not that important. However, it's also a habit that salespeople often fall into when customers ask them a question. They're trained and instinctively they answer. Now, my thought for you today is to stop this and ping it back. Yes, that's right. Ping back the question to find out a little more about where it came from. Some uses for you, some examples. May I ask, what made you ask that question? I'm curious to know, why did you ask that? That's an interesting question. What drove you to ask it? This way, you can gain a better understanding of your customer's motivations and intentions, which is extremely valuable in establishing criteria and needs. So ping it back, or was it a song by Enrique Iglesias? Marvellous, marvellous. Little technique there for you, little idea just to help you with your advisory skills as well. So that pretty much wraps up our mortgage live stream today. I hope you found it useful. I've always enjoyed it, as always. As always, if you want to get onto our mailing system, I always put that up, don't I? There's the QR code. Get on our Mortgage Development Hub, and we can chat about all the things we can do to help you moving forward. Lots going on in Archer territory at Tivoli Studios, so looking forward to helping you as much as possible. Other than that, I'm going to wish you to have a fantastic rest of the week. Lovely sunshine this week, indeed in abundance. See you next week.